Hi, good evening, everyone. Welcome to today's webinar. So I'm the speaker today for today's webinar. So my name is Zheng Kai. I'm one of the research analysts at iFast Malaysia. So in today's sections, I will be sharing an interesting topic about what you need to know about ESG investing. So first of all, let's briefly go through today's agenda. So first of all, I would like to share about why should investor participate in ESG investing, what is ESG, and why does ESG matters nowadays, and followed by how to determine ESG company in Malaysia, challenges of investing in Malaysia in ESG, as well as how can investor participate in ESG investing, and also some ESG funds comparisons. And last but not least, I will also wrap up this section with some key takeaways. So without further ado, let's begin. All right, so if you have been keeping up with the investment news and also recent development regularly, I'm sure that you have been noticed the term ESG coming up more and more often. So as the funds industry and company is increasingly pivot toward the sustainability, we actually see a surge in sustainable funds, including ESG mutual funds and also ESG ETF recently. So according to the data from Morningstar and Trade Insight, the total number of sustainable funds actually reached 3,987 by June 2020, up by nearly 30% from 2019. And besides, the AUM of sustainable funds also nearly doubled from about 900 billion in 2019 to over 1.7 trillion. So as of 2020, the sustainable funds universe actually comprised of 3,435 sustainable mutual funds and also 552 sustainable ETF. So with it also comes with an AUM of 1.56 trillion and 174 billion respectively. So this has actually shows that the investor interest in the ESG theme is growing stronger, and in order to cater for the growing demands, they are actually getting more and more ESG funds being launched in the market, as we can see in this chart. Next, let's also look at the performance comparisons before we deep dive into the later slides. So this is the performance comparisons between the ESG and non-ESG indices. So over the past few years, the MSCI World ESG Index has actually shown some stronger performance compared to the MSCI World Index. So on the chart on your left, as you can see, the blue color line, which represents the MSCI World ESG Index, has actually shown a return almost similar to the orange color line, which is the MSCI World Index since 2015. And if we were to look deeper into it, we may actually notice that the return differences between these two indices started to widen recently, showing that the ESG stocks have actually gained some greater popularity recently. And other than that, if you look at the chart on your right, we have the Malaysia indices comparisons over here. The blue color line, which represents the FTSE 4GBM index, which is actually an ESG index that we have in Malaysia. This index has actually consistently outperformed against the orange color line, which is the FBM KLCI index since 2015. And even during the COVID-19 period, the COVID-19 outbreak, we can observe that the FTSE 4GBM index actually experienced a lower decline compared to the FBM KLCI index, and the index even rebounds stronger compared to the FBM KLCI index in second half of 2020. So the ESG index actually enjoy a generally stronger year from the return perspective in 2020 and also 2021. There is actually quite, I would say, important, because there is always a misperception that the ESG based investing require a performance sacrifice, which is actually not true. But do you actually know what exactly is ESG? So actually, ESG stands for environmental, social, and also governance. So it actually describes the area that characterize a sustainable, responsible, or ethical investment. So when this term pair with the another term, investing, it generally refers to investing which prioritize optimal ESG factors or outcomes. And in order to have a better idea of ESG, let's dive deeper into each of the components. So in a very simple terms, E environment actually refer to the impact and consequence on the environment, as well as any efforts to reduce it. And factor can include like climate change, greenhouse gas emissions, and also deforestation. And S actually generally refer to the relationship with the stakeholders such as the employees, suppliers, client, and also communities, and ensures that the fair treatments are being provided to them. Some poor example are that usage of, let's say, child labor, and also enforcing a physically contaminated working environment. Finally, G. The G actually stands for governance, which refer to the implementations of fair corporate governance, leadership, audit, internal control, shareholders' rights. And a company with a good governance can actually help to analyze the interests of stakeholders and to ensure that the company long-term sustainability. So as such, an investor should look for this kind of company, as good governance is a sign of a well-managed company, which will turn out to be a good investment for the investor. Next, in fact, ESG is actually very subjective and also free objective. Currently, there are different organizations, including companies of very industries, asset management fund association, and also non-profit organizations who have actually developed their own guidelines and also framework on how E, S, and G aspects should be viewed and ultimately measured. The ESG metrics are largely provided by third-party agencies that generally utilize their own methodology to collect and also analyze data related to a diverse array of ESG issues. So they can actually roughly divided into two groups. The first type of company would be the standard setters. So these organizations generally provide standard for company to meet, as well as the structures and provide guidelines for ESG reportings. Example of such organizations include the Sustainability Accounting Standard Board, SASB, and the Global Reporting Initiative, GRI. The common standard practice are basing guideline on the United Nations Sustainable Development Goal, of which there are a total of 17 objectives that range from no poverty, zero hunger, reducing inequality, and so on. And other than that, other than the standard setter, we also have data providers and also aggregator. These organizations actually collect and provide data related to particular ESG issues. Many of these organizations also double up as a rating agency, and they have their own methodology in evaluating how well a company comply with ESG standards. These actually include general data aggregator like Bloomberg and also Thomson Reuters, as well as more specialized companies like Sustainalytics, which were acquired by Morningstar in 2020. For example, this is the Sustainalytics ESG risk rating, which shows how well a company is actually managing the ESG risk. Of course, this is just part of the ESG report that generated by Sustainalytics. In their report, they also analyze each of the ESG risks, measuring the company risk against the industry peers, and so on. So let's talk about what are the different ESG strategies. Basically, ESG strategy actually fall broadly into the following category with different level of ESG incorporations. So starting out from the bottom, we have these non-ESG rated funds, which totally does not include any ESG consideration in their asset allocation process. However, it is unlikely, as most of the funds actually minimally has a basic ESG screening built into them. The exclusionary ESG screening is generally the standard market practice today. Minimally, they actually utilize the exclusionary screening, which avoid investing in some specific companies, industry associated with some objectionable and also questionable activities, such as tobacco, weapons producers, or fossil fuels. And at a higher level, we have positive selections. So these funds actually invest in companies that score highly on ESG rating system, and they actively select industry leader for ESG metrics and look to invest in them. And lastly, we have also this thematic and impact investing at the top of the chart. So this fund can typically says to isolate from specific ESG issues. Another common practice of this would be undertaking an active ownership approach, where usually when these funds invest in a company, they are often to be the significant shareholder of the company, so that this actually can give them some significant voting rights and also influence on the company policy and directions to generate a positive impact with regard to certain ESG related decisions. And finally, there is also another practice where the fund could target specific non-financial outcomes along with financial returns, such as removing the amount of greenhouse gases from the environment. However, it is also worth noting that actually this kind of strategy presented are just closer to the guideline along a scale rather than clearly defined categories. And there are some possibility that there will be some overlap between the strategy. Next, let's talk about why does ESG actually matters nowadays. Here, I'm going to show you some real-life ESG example which fall short on meeting the ESG framework as well as the consequences of that toward the company. So in 2019, one of the United Kingdom UK largest water companies was ordered to pay 126 million in penalties for breaching their duty on sewage treatments. The company has been actually flagged out and fined by regulator at least for 4 times for manipulating the water samples for 7 years to hide the true performance of their sewage treatment works. And they also irresponsibly releasing the wastewater, which were actually not fully processed yet, into the environment. And they deliberately misreporting the data and flooding the can cost with raw sewage. So as a consequences, the Southern Water will have to actually refund about 123 million to customers through their bills over next 5 years and pay a fine of 3 million. Undoubtedly, the huge penalty has actually negatively affected the company performance and also reputations. So over here, I have also shown another example. It will be Nestle. So in 2020, Nestle was fined 90K on 2 counts of releasing industrial effluents in excess of the acceptable limits. So on the first count, the company was charged as the company released 5 types of industrial effluents containing biochemical oxygen demand requirement that actually exceeding the standard limit into the inland water. And the second was for releasing concentrated chemical oxygen demands requirements in excess of the standard limit into the inland water as well. So although the fine was only 90K and it might look a bit small for such a big company, but it did raise the market and tensions over the Nestle strategy and policy on meeting the ESG frameworks, as well as affected the brand's name and reputations of Nestle. Next, following the real-life example that fall short on meeting the environmental frameworks, now we will look into some popular social issue that happened in the past on the world-famous sport equipment makers, Nike. Okay, so Nike actually became infamous for its child labor practices back in the late 90s. So in 1996, Life magazine actually published a story that included a photograph of a child stitching the football, as you can see on the image, that actually there is some evidence that the photo was actually staged since it shows an inflated football, while in reality the balls were supposed to swim in uninflated, but it didn't matter. This incident actually affected the company's reputations and led to a significant drop in their sales volume. While such practices have since been mitigated, this case has actually become a classic example of a large NMC not doing enough to look into aspects related to the well-being of their employees and the negative impact they have brought upon to the communities. And another example that I would like to show here would be Top Okay, so in the mid of July 2020 and also early 2021, US Customs actually placed a detention order on import of products made by Top as the firm is suspected of using the false label. The CBP actually accused Top Glove of debt bondage, excessive overtime, and abusive working and living conditions. As you can see, right after the news was released, by more than the price of Top Glove actually fell tremendously by more than 10% during the first and second ban, as investors actually worried that the import ban would actually affect the sales volume of the company. Next, let's move on to the some other example that related to governance. Okay, in 2019, after WeWork filed the paperwork for their IPO, some questionable practices were actually sealed out by the financial reporter and also analysts. And without the establishment of proper internal control, it was actually found that the founder and CEO Adam Newman actually primarily owned the VWE trademarks and then sold it to WeWork for USD 5.9 million. And Newman actually made some arrangement where he can actually borrow money from WeWork on the interest rate that were below the market rates. And other than that, Newman's wife, Rebecca, okay, will have the sole descriptions to direct the CEO succession process if he became permanently disabled, and company coffers will actually also use to fund Newman's pet project and his love for surfing, including a 32 million investment into a startup led superfood by surfer Leo Hamilton. Okay, so following the scandal review, WeWork was actually forced to delay its initial public offering IPO as there was lack of investor interest. And in the meantime, SoftBank, who was the substantial shareholder of WeWork, was also took a major hit where its share price actually plunged about 30% since its highest level in August 2019. And this is because the investors' skepticism actually grew over the path to profitability for some cash-burning investments such as WeWork. And when we talk about governance scandal, and the first thing that normally come to our Malaysians' mind would be the 1MDB, One Malaysia Development Berhad corruption scandal. So on 26th of Feb, M-Bank Berhad was slapped with a 2.83 billion settlement by the Malaysian government for its actually involvement in the One Malaysia Development Berhad corruption scandal. The 2.83 billion settlement, which was nearly 30% of AMMB market capitalizations at the time, actually dealt a big blow to the banking group. And M-Bank shares actually plunged by 11.4% on 3rd of March after it suspended the trading of its security for 2 days. And all in all, with the growing knowledge that sustainability practices weigh heavily on a business ability to grow over the long term, it is clear that the emphasis on ESG is here to stay and continue to grow going forward. So as what we know, more and more global corporations and also business are increasingly motivated to adopt environmentally friendly and sustainable practices. So as companies adapt to the demand of ESG, a well-developed financial sector is essential to support their needs. So the capital market is hence to uniquely placed to answer the calls for sustainable finance in supporting the long-term growth of the economy. So in Malaysia, the SC Security Commissions had actually identified early on that the global trends toward investment that address ESG issues would actually become a major force in the financial landscape. So since 2014, several initiatives have been introduced by SC, including the development of the SRI Sukuk frameworks to facilitate the financing of projects that benefit the environment and also society. So what is actually SRI Sukuk? So SRI Sukuk is where the Sukuk proceeds will be applied exclusively for funding any activity or transactions relating to the eligible SRI projects. So as the SRI Sukuk framework is benchmarked against international standards and also best practices, the introduction of the SRI Sukuk frameworks would actually allow the issuers to facilitate the financing needs for projects that meet the United Nations Sustainable Development Goals. Okay, so besides, SRI Sukuk also would broaden and diversify the pool of investor and attract the investor that prioritize SRI, as well as encourage them to invest in green, social, sustainable asset. The SRI Sukuk framework has enabled Malaysian entities to issue SRI Sukuks in the form of green, sustainable, and social Sukuk. And the push toward SRI has also been supported by Bursa Malaysia Berhad. So in December 2014, it actually launched the FTSE4Good Bursa Malaysia Index that is aimed at profiling company with good environmental, social, and also governance practices. The internationally benchmarked FTSE4Good Bursa Malaysia Index was the first ESG index to be launched in Asia, and it initially comprised roughly about 24 constituents. And in July 2021, Bursa Malaysia and FTSE Russell actually launched the FTSE4Good Bursa Malaysia Sharia Index to cater to investor demand for ESG and also Sharia compliance index solutions. So the FTSE4 GBMS index is designed to track the constituents in the FTSE4 GBM index that are Sharia compliance. And for the latest review period of December 2021, the total number of the constituent in the FTSE4 GBM index has actually increased to 80, while the FTSE4 GBM Sharia index is being made up of 57 constituents. To select the company for inclusions or exclude company from the index, the FTSE4Good Index series will actually use the overall rating from FTSE Russell, ESG rating, and data model. Last but not least, there is also another significant development in the SRI market was the introductions of the guideline on sustainable and responsible investment funds, which is the guideline on SRI funds. In late 2017, this guideline actually helped to facilitate and encourage the greater growth of SRI funds in Malaysia. This guideline actually set out the additional requirement to be compliant with any new funds or existing funds that seeking to qualify as an SRI funds, while requiring additional disclosure and reporting requirements that aim to actually encourage greater transparency in investment policy and strategy of SRI funds. Within this guideline, an SRI funds policy and investment strategy must actually adopt one or more sustainability considerations, such as the UNGC principle or one or more of the SDGs or any other ESG factors. So in determining whether a fund satisfied the requirements, information submitted to the SC will actually be compared against SRI strategies that are currently in practice globally, including the negative screening, positive screening, ESG integrations, thematic investment, and as well as the impact of social investing. So starting from the table below, okay, as you can see, for impact or social investing, this kind of fund, this kind of investment strategy actually targets on the investment with the intent to solve the social or environmental issue or investment toward businesses and project with a clear social or environmental purpose. Then let's move on to the higher stage, higher level. So for this thematic investment, this actually selects on some investment that align with specific themes that related to sustainability. For example, some mega trend here would be the rapid urbanizations and also climate change. Other than that, we also have ESG integrations. So for ESG integrations in the funds, in this kind of funds investment analysis process, they will actually run a systematic assessment of quantitative and qualitative data on environmental, social, and governance factors before making any investment decisions. And on top of the table, we have this positive screening and also negative screening. For positive screening, this strategy is actually aimed to prioritize or look for investment in companies that demonstrate the positive ESG performance relative to industry peers, while the negative screening is aimed to exclude or filter out the companies which undertaking certain business and activity that against the specific ESG criteria. All right, Then let's move on and talk about the challenges to investing in ESG. So there are some significant obstacles in the space that investors have to be aware of when we come to ESG investing. So firstly, there is a lack of standardizations across the board regarding ESG investing. The complex global geopolitical environments, different operating practices across industry, and also how broad the ESG space can make it almost impossible to standardize. Of the frameworks that are available, all of which are currently voluntary guidelines, and actually none of them give a comprehensive overview for ESG reportings. So meaning that many firms actually use more than one guideline or one standards. So different people may have different interpretations, over a certain issues. For example, in early this year, the European Commission actually reviewed that they were planning to label nuclear and gas and natural gas as green investment. However, some environmental groups actually disagree with the recognitions of natural gas as green because it would actually undermine the EU credibility as a global leader in tackling the climate emergency. So actually, with no consistent approach for reporting between firms, it is quite challenging for stakeholders to compare the opportunity fairly and also effectively. With this in mind, it is no surprise that lack of standardization is currently the biggest threat to effective ESG disclosures for businesses. Hence, a standardized system is just seen as a priority for the ESG space, such as the global frameworks for ESG investing. Other than lack of standardizations, the second, another challenge would call greenwashing. Greenwashing is the process of conveying false impressions or providing misleading information about how environmentally friendly a product is. But in fact, these company environmental practices do not really result in any real changes for the environment. So for example, in 2015, Volkswagen actually ran a marketing campaign claiming that low emissions and eco-friendly features while concurrently installing a defeat devices software in their cars that were designed to cheat the emissions. So in reality, the engine installed with this software actually emitted nitrogen oxide pollutants that up to 40 times above what is allowed in United States. And the scandal resulted in Volkswagen recording millions of car worldwide and also running in losses worth billions. And another example of greenwashing would be Starbucks. Okay, in 2018, Starbucks released a storeless lip as part of its sustainability drive. However, some expert actually claims that this lip actually contain more plastic than the old lips and straw combinations. Therefore, introducing a strawless lip might not be as environmentally friendly as what people think. Therefore, actually, greenwashing is a significant threat that investors should be aware of when it comes to ESG investing. All right. Lastly, let's also talk about the ESG funds that are currently available for investors through our platform. All right. So first of all, let's take a look at the 9 global equity ESG funds that are currently available on our platforms. So over the list here, we have FSMOne World Series Global Sustainability Funds, Islamic Global SRI, Maybank Global Sustainable Equity I Funds, and so on. But due to the time constraint, I'm not going to go through every single funds. Most of the ESG funds here actually are aiming to achieve medium to long-term capital growth by investing in the global equity market. And all of these funds are actually retail funds, except for FSMOne's World Series Global Sustainable Mobility Funds, IHB Global Impact Funds, and also Sustainable Series Positive Change Funds. And let's move on to another slide. Next, we have also made a comparison between the fund's top holdings, the top teams, and also the geographical allocations. If you look at the sector exposures, all of the ESG funds over here have the greater exposures either in IT or actually healthcare. And other than that, if we look at the geographical allocations, all the global equity ESG funds here actually have the highest geographical exposures in the United States. Then let's take a look at the fund's performance. By looking at the table, we may notice that the ESG funds performance were actually quite in line, where all the funds here actually recorded a negative return recently. And as you all know, this was mainly due to the sour sentiment in the global equity markets, where the investor actually worried that the rate hike will come earlier than expected, and the resurgence of COVID-19 cases, as well as the sign of slowing down in China economy, as well as the escalations of geopolitical tensions between the Russia and also Ukraine. So now a question might pop out in your mind. So after talking for so long, which ESG funds should I consider? Okay, so after analyzing the fund's return and also risk, we have found that the Nomura Global Sustainable Equity Fund has a relatively stronger return and actually shows a stronger resiliency amongst all the funds in the same category. So although the Nomura Global Sustainable Equity Fund may not have the highest returns on, let's say, on a 1 year basis, but we actually do see its strong resiliency during the major market corrections. And since the target funds launched on 15 May 2019, it actually consistently outperformed the benchmark in all time frames. And additionally, the fund actually delivered better performance with a lower decline during the initial outbreak of COVID-19 in March, and also equity drawdown in 2022, which was due to the Fed hawkish stance. Other than the global equity funds, there are also another 7 ESG funds in different categories that are available for investors through our platform. Among all these ESG funds, there are actually 3 funds under global climate category: 1 Asia equity funds, 1 Asia balance fund, 1 Malaysia equity funds, and also 1 global technology funds. Similarly, most of the ESG funds over here are also aimed to achieve a medium to long-term capital growth. But one thing to take note is that there are 3 global climate funds are actually wholesale funds, and they all are also feeder funds. And going to the next slide, in terms of the sector exposures, these first four funds on the table actually have the greatest exposure in the technology sectors, while all the global climate funds have the greater exposure in industrial sectors. And in terms of the performance, we actually found out that the orange color line, which represent the Maybank Global Sustainable Technology Fund, actually show a stronger return compared to other funds, while the gray color line, which represent the BNB Arabs Malaysia Sharia ESG Equity Fund, actually registered the worst performance. However, one thing to take note is that nearly half of the funds here are newly launched, and therefore these funds only have a track record of less than 1 year. So in order to do a return comparison, we actually use the historical data of the respective target funds to represent the feeder funds performance. As what I mentioned just now, almost all of the ESG fund also trending downwards since the beginning of this year, and this was mainly because of the investor. They are worried about the rate hike that would actually come earlier than expected, as well as the resurgence of COVID-19 cases and the slowing down sign and the sign of slowing down in China economy, as well as the recent market corrections, which was due to the escalations of geopolitical tensions between Russia and also Ukraine. So all in all, there are 3 key takeaways that I would like to share before I wrap up today's sections. So for a long time, actually a lot of investors thought that sustainability investing would actually lead to a weaker returns. But in fact, numerous studies over the last decade actually shows that ESG investing actually can achieve a similar or even superior returns compared to the traditional funds. A good ESG quality can actually help a company to develop a competitive advantage, which can then drive some outperformance. Secondly, controlling your risk exposure is actually quite important, I would say, when you invest in any funds or asset. ESG investment could therefore be an excellent option, because companies with a high ESG score have been shown to reduce the overall volatility of a portfolio, as these companies tend to experience a lower fluctuations due to the additional risk filtrations. So with that, the risk of major incidents or high profile negative event is less likely to happen. And last but not least, over the past few years, the AUM size of the sustainable fund has been growing substantially, as the ESG theme funds have actually gained a lot of popularity. And on the other hand, in order to cater for the growing demand, they are getting more and more ESG funds being launched in the market. So with that, we actually believe that ESG investing may be the most sensible approach in the long run, and investors should consider adding some ESG exposures to their investment portfolio. And before we move on to the Q&A sections, please also allow me to take this opportunity to actually promote a new sukuk issuance, which is actually a senior sustainability sukuk from NBSP Bank, which we will bring to, this on board soon. So over here, as you can see, this is a senior sustainability sukuk, and its credit rating is A+. Okay, so the expected issue size is up to 300 millions, and as the expected issue tenure is roughly about 5 years, and the target book open date will be as early as 28th of March 2022, and the issue date would be as early as the week of 4th April 2022. So this is just some brief or some simple info about this new senior sustainability sukuk. So if you as an investor, if really interested on this bond, you can actually call to our bond dealing team, and this is the hotline. So other than that, actually, I would like to also share you a link if you would like to know more about these funds. So 1 second, please. Let me share you the slide. Yeah, this is the relevant link, so I will post it in the chat room so that you all, if really interested on this or would like to know more about this bond, this sukuk, so you can actually read through this PDF file. Let me try to post it on the chat room. Yep. So other than that, there is also another thing that I would like to share with you guys. So I would actually like to take this opportunity to share with you some useful tools and also some website for you to search or filter out the ESG funds and also ESG bonds. So first of all, this is the list of all the SRI funds that have been approved or qualified as a SRI funds by SC, and this list is actually at 10 January 2022, and I actually can't find any other newer versions. So I believe this is the latest list. And other than that, there is also one more thing. Hold on, yeah. Okay. So other than that, we have also these tools called BIX, okay, Bond plus Sukuk Information Exchange. So if any investor actually interested to find some ESG bond or Sukuk, you can actually come to this website, BIS Malaysia. So over here, you can actually filter out what are the ESG bonds or Sukuk that are currently available in the market. So over here, you can actually filter out. You have to choose these ESG bonds and then go to some other like industry. If you are really interested, for example, you like to look for some construction bonds, you can actually click on constructions. And other than that, there are also some other things that you can actually adjust according to your preference. And yeah, just click search, and then they will pull up all the available ESG bonds that are currently available in the markets. So this is one of the tools for you guys, for investor to actually filter out the ESG bonds. And other than that, I would also like to give some updates or some share with you guys about our recent enhancement for our website. So over here, funds, normally, previously, we can't actually filter out which fund is ESG funds, which is non-ESG funds. But recently, we have actually did some enhancements. So for now, you can actually filter out the ESG funds that you would like to invest in. So over here, you can go to fund selectors. And once you click into fund selectors, over here, there's a more filter. Okay, this button, you can click this and then scroll all the way down to ESG column. So over here, you can actually filter the ESG funds by clicking yes, then click filter. Then it will pull up all the ESG funds that are currently available through our platforms. So over here, you can see a small logo ESG over here. So this actually shows that this fund is a ESG fund. Okay, so I think that's all for today's sharing. So let's move on to Q&A sections. Okay. All right, so I see some questions. What if the workers want to do overtime in order to earn more income and employer allowed such overtime in order to meet order quantities? Is this labor exploitations? Actually, this is not considered as the worker willing to do for overtime, and at the same time, the employer also allowed to pay their OT. So for this case, it's actually not really so-called abusing their labor. All right, so for the next questions, can you please share the link of the SI fund? Yeah, sure. I will post the link into the chat box. 1 second, yeah. All right, so this is the link. So basically, other than clicking this link, you can actually go Google and then just search for SRI fund list. I think it will be on the top of the list. Yeah, over here. Yeah, list of sustainable and responsible investment SRI funds. So you can just click this link and then yeah, it will pop up all the SRI list fund list. So over here, yeah. Other than that, yeah, this is the retail funds and also the wholesale funds. So yeah, you feel free to take a look. All right, so other than that, yeah, I can't see any more questions. So let me pass it back to you first, Jiaqing.
Thank you, Zheng Kai, for the insightful presentation. If you have further questions, feel free to send us an email at investhelp.my alliancefundssupermart.com. A replay of today's session will be available right after this. Head over to our YouTube page, Alliance FSMOne Malaysia, to catch this replay. We will be having another webinar session with Afin Huang Asset Management on this coming Thursday, 10th of March, where we will be talking about Asia market outlook strategy moving forward amid volatility. If you haven't registered for this event, please head on to our website now at www.fsmone.com.my to register. Once again, thank you very much, Zheng Kai, for joining us today, and thank you everyone for attending today's session. Before ending our webinar, I would like to share that currently FSMOne is running a bonus units campaign. Diversify your portfolio amid market volatility and inflation. In this event, you can enjoy 50 ringgit bonus units when you invest a minimum of 1,000 in one of the 5 unit trusts in this campaign. The participate funds which have Principal Asia Pacific Dynamic Growth Funds, Afin Huang Aiman Asia ex Japan Growth Funds, RHB Big Cap China Enterprise Fund, East Spring Investments Dynasty Equity Funds, and Manulife Global Resource Funds. So for the funds detail, you can look over from our website. This campaign is valid from 7th of March until 31st of March 2022. So for further information, you may refer to our FSMOne website. Have a good weekend. Sorry, have a good weekday. Thank you.
Thank you so much, guys. Good night, guys.
Good night. Have a nice day.